The short answer is not much. The longer answer is there's some things to be alert for, as there are anytime the Fed makes a major announcement. Um, it's widely anticipated that the Fed will do nothing in terms of rates at this meeting, which the announcement, which will be scheduled for 2 o'clock on Wednesday, December 11th of 2019. Um, the broad consensus is the Fed has telegraphed in many different ways that they are on hold. Um, and I think that, well, the first reason would be, first of all, you've had three rate cuts. You do have to give rate cuts time to percolate through the economy. And I think the Fed is very much inclined to do that. And I think it bought them some time when the last set of job numbers came out last week that were positive by any standards, for the economy and for people looking for jobs. And so that should buy them the cover they need to stay on the sidelines for the foreseeable future. The thing that I would be looking for would be commentary regarding the repo market, because the Fed has been putting a lot of money into the system via the repo market. We've touched on this previously, but basically the Fed has really kind of come in to be the lender of last resort for repos, and a lot of the repo market, repo being short for repurchase agreement, um, is a major source of financing for banks and other financial entities. And the feeling has been that there's been some tightness in the repo market. It's a little unclear why. It doesn't appear to be worrisome. I think it was for a while until the Fed stepped in. But I do think the Fed has to, at some point, start to address what might be the causes of this, whether that's banks either feeling the need to keep excess reserves on their balance sheets, or banks not trusting each other in terms of their ability to provide collateral for these collateralized repurchases. There's any number of things that are not necessarily solid for the market or the financial system as a whole. And I think the Fed is doing a great job of I'm going to say, papering over the problem. And in many ways, it's provided a lift to the market because there were the worries that have now abated. And also, in doing so, the Fed balance sheet has expanded considerably. And that typically tends to correlate well with equity markets as a whole. But that's what I would be looking for most prominently. I would kind of skip past the basic announcement, unless, of course, there's a major surprise. But the Fed's not really big on those kind of surprises, and I don't see the need for them to surprise. But I would be really keeping a close eye on what they see sort of in the plumbing of the financial markets, again, which would be the repo area.